I want to show you something that's going to make a lot of people uncomfortable. Not because it's controversial. Because it's just cold, boring, unfiltered data honestly. Everyone loves the crypto guy who turned $5,000 into $5 million. Nobody puts that story next to the boring index fund story though. So today we're doing exactly that, side by side, over 10 years. No hype. No filters. Just the actual real numbers, plain and simple. Let's go back exactly 10 years, same starting point for both people. Person A puts $10,000 into a simple S&P 500 index fund. It's literally 500 of the biggest companies in America, bundled together. No excitement, no Twitter threads, nobody makes videos about index funds. Person B takes that same $10,000 and buys crypto instead. A mix of Bitcoin, Ethereum, and a few hot altcoins at the time. Same money, same starting day, but completely different rides ahead of them. Here's what Person B's decade actually looked like, the part nobody shows. Year 1, crypto explodes, Bitcoin goes on an absolute tear upward. Person B feels like a genius, telling everyone at dinner parties about it. Year 2, it crashes. Not a dip, a brutal, gut-wrenching crash. Some altcoins Person B bought are down 80-90% now. Some of them don't even exist anymore, completely wiped off the map. Years 3, 4, 5, sideways chop mixed with sudden terrifying drops. Person B checks the portfolio obsessively, loses sleep most nights honestly. They sell some, buy back in at the wrong time, out of panic. Then years later, another massive run happens, new highs, feeling genius again. Then another brutal crash follows right after, wiping out the confidence. This is the part highlight reels never show, the emotional roller coaster underneath. Most people didn't hold calmly the entire decade through all of this. They panic sold at the bottom or got greedy buying at the top. Now here's Person A's decade with the boring index fund instead. Frankly, it's boring. There were scary dips too, don't get me wrong. Some months the market dropped and it genuinely felt uncomfortable to watch. Overall it was a slow, steady climb averaging 9 to 11% yearly. No Twitter threads, no sleepless nights, no obsessive checking of the account. Person A basically forgot the account existed for long stretches of time. And that, honestly, is actually the entire point of this comparison. So let's talk real numbers, because this is where it gets interesting. Depending on the exact window and coins, crypto sometimes dramatically outpaced index funds. We're talking multiples, not percentages, for people who bought early and held. But most people did not experience that ideal outcome in real life. Holding through a 90% drawdown requires discipline almost nobody actually has. Index fund investors statistically stayed invested the entire 10 years more often. Because the ride was gentle enough that panic selling rarely felt necessary at all. So here's the uncomfortable truth about crypto's best case versus real-world returns. Crypto's best case can beat index funds by a genuinely wide margin. But average investor returns, factoring panic and bad timing, often look worse. And this is the myth nobody talks about in these conversations. That the highest possible return is automatically the best choice for you. It's not. The best investment is one you can actually hold on to. An investment causing you to panic sell isn't better than one held calmly. Many crypto success stories you hear about are actually survivorship bias, honestly. You hear from people who held. Not the larger group who panicked. Now, I'm not saying crypto is worthless or everyone should ignore it. Crypto is legitimate, though extremely volatile, and some people can handle that. For them, meaningful exposure to crypto can genuinely make sense sometimes. But for most people, index funds should be the boring, reliable foundation. Crypto, if included at all, should be a small slice on top. Money you can genuinely afford to lose completely without life-changing. So here's a simple way to think about this whole decision clearly. If you need this money within 5 to 10 years, index funds. The volatility of crypto is too dangerous for money you actually need. If it's truly long-term money you won't touch, crypto could make sense. Maybe 5 to 10% of your portfolio as a high-risk bet. But build the core of your wealth on the boring, unexciting stuff. Because boring and consistent tends to beat exciting and unpredictable, long-term. So the real question isn't which one has objectively better returns overall. It's which one you can actually stick with for 10 straight years. The data doesn't show the sleepless nights or the quiet panic sells. If you've held through a crash, drop your experience in the comments. I want the real stories, not just the polished highlight reel versions. If this gave you clarity on risk, hit subscribe right now, please. Next week, how much of your portfolio should be risky at every age? I'll see you in the next one. Thanks so much for watching.